Hi everyone. Today's February 21st, and this is the Moneyball morning report for the Benzinga profile. It is also monthly options expiry, and it is also Friday. So what's interesting about this expiry is that we have 31.92% of all the gamma exposure that exists in the market. That's a big number, folks, expiring today. And so here are the floors and ceilings that we're watching. One, today's likely to be volatile, but every day's been pretty volatile, right? Break down, pop up, break down again. It's just a mess. Okay, so let's think about this. We've got support sitting right around 61.30, right? We have resistance at 61.50. But when this options expiry starts to unwind, what we're going to see is probably a few shocks. Here's what we know. Let's go back to the big picture. What have we had? We've had a breakout formation that looks a little to me like a double top, right? 61.70, not heading above it. Momentum still high. It's not divergent. Trend still up. Looks to me like we come to the bottom of the box. So a couple of things we can do. If it bounces up, and let's see where we are in terms of the day. Am I above the close of the prior day? The close of yesterday, 61.33. Look at that. Rock fight. 1, 2, 3, 4, 5, 6 days of touching this line. It is a rock fight. That's why we are seeing the point of control sitting right at that number over the last several days. Okay, so where's the opening candlestick formation? That's key. We have the high up here at 61.40. Let's remove all the fibs. And we have a low at 61.30. Now, look at what we've done. We've broken out and down through the low, but we haven't broken the high. So that's going to be the line in the sand. Until we break the high at 61.39, what that's going to mean is we're in a range. And so the range is all the way down into 61.26. Notice the VWAP of this range is 61.25, and the closing VWAP of yesterday is 61.23, and there's also a liquidity line there. So the go, no-go line for longs would be the following. If we come down into 61.23 and bounce, we've got ourselves a long. That means don't go short at the loss of this line. And if you do go short, you better keep your stop tight and turn around if it gets above 61.26. Okay? So that's what the E-minis are telling me. Yes, dips are buys, but the dip could be pretty savage. And because there's so much gamma expiring, meaning the option chains expiring, we could see reflexive motion that takes us in either direction. What is the moving average storyboard? Flat. So that confirms we're in a range. What's momentum? Also flat, but positive, which tells us that we're also in a range, but that we're holding higher lows. So again, the line in the sand, 61.23. That's going to be it. If it breaks below that line, don't short it until you've seen a confirming formation that says the bounces are failing, and you can add to that position. Notice price compression. You see what's going on with the Keltner bands? Downward, upward motion, the bottom Keltner band pointing up, the top Keltner band pointing down. That is compression that's going to lead to explosion. Okay? Price compression leads to price expansion. So, and we are setting up for that. Notice yesterday, same sort of thing. Keltner band coming in, both from underneath and above, and boom, price expansion, all there is there. Now, these lower highs telling us price expansion could fade. My thought is Sell the bounces. If you're into it, sell the bounces. But run your stops pretty tight. Okay? Nothing wrong with that. We could easily see a rollover here, but we could also see a reflexive bounce. I just want you to be careful. Don't think I'm being Captain Obvious. Just trying to tell you something wicked this way comes, as it were. I don't know what line that's from, but here we are. Taking a look at the NQ. What do we have going on? Still, price action. Downward trending. But look at what's happening. Sideways action, right? Opening candle formation, high at 22,170. We're fighting against that number right now, right? We poked our head above it. Can't stay there. Point of control right here. Flat moving averages. Still got a little bit of trend on this momentum. So looks to me like a blow off top coming into 22,220. That's where I think we have a little bit of a collision event. Okay? If it were me, and I was looking at this formation, I would not want to mess around in here. I would wait for some sort of news to jolt us in one direction or another, and then watch for price action to reverse. Where is the go, no-go line for buyers? That's 22,100. If we lose that line, notice, we got a big move down. Big liquidity action at 21,964. That's where everybody got involved yesterday. Momentum is still up. Trend is flat. In the near term, overall downward formation. But this storyboard in the past tells me what I am expecting here in the future. But we'll see. Right? You could do either one. Dips or buys, spikes or sells, until they aren't. Watch your risk size. Size control is going to be very important today. If it moves past your area and you're thinking to yourself, oh, I'm just going to add to the position and get myself in better shape, do not do it. Take your lumps and hit the road. Wait for the setup that tells you what to do. Let price confirm what you want to do. Okay? Don't rush it. Market's going to be here for you, and the market's job is to facilitate inventory movement. And so just wait until the inventory tells you it's time to move. Okay? All right. So that's what we've got. 22,100. If it loses that area, we're down another 30 points and then all the way down in the future. I would be very careful today. A lot of money to be made. A lot of money to be lost. Okay? Now, what I have noticed is that I don't even know why my voice did that squeaky thing. What I have noticed is that the YM has really become much more volatile in terms of overall motion, lengthwise of wicks and price action. So there's a lot of money to be made here. So let's take a peek at what's going on from first the daily. And we are breaking out of this wedge. Topping formation here. Ultimately, we could see ourselves right down here at the volume point of control. 42,000, 43,000. Yesterday, I said, listen, 44,000, very likely to be that line in the sand where we're going to see buyers. Yesterday, stopped just shy of it, bounced, and today, we gave up the ghost. All right, what's happening here? First of all, we had a big move up. So let's do ourselves a favor and draw Fibonacci. All right, last major wave, low to high, 50% range, 43,595. Okay, so we're going to put a line there. I think it's a little higher. I think it's 43,600. So here's the storyboard. Buyers came in here at 44,009. Buyers came in here at 43,965. Buyers came in here at 44,100. Buyers came in here at 44,188. And buyers came in here yesterday at 44,034. Every single time it bounced, after the first test on January 27th, we made a lower high, right? Tested a few highs. We know what this formation looks like, right? This is a breakdown formation when we're far away from the moving average. It starts going sideways, sideways, sideways. Look to see how far away we are from this, what is this, my exponential. And then we know we've got a mean reversion in the formation. Every time it comes back, gives us a lower high, even though it's a higher low. Gives us a lower high, gives us a lower high. And here we are breaking that formation, but still buyers coming in around this 43,950. So what should happen? Buyers are going to show up again. They are. They're going to show up again. How much power they have remains to be seen. So let's take a peek at what's happening right here. We can see a big drop. I don't know if it's news. Could be news. I don't know what it is, right? But trend on the 1 hour chart clearly says, you know what? My bounces are sell zones. I'm thinking it's the same thing here today. Where is the big bounce that might rotate the chart? Couple of ways you can trade this. One, you could say, hey, lady, I don't think it's going to fade. I think it's going to hold. And so we have this bottoming formation, price action holds, and we bounce off the area. Liquidity right here. Where's the line in the sand? My thought is, look where the hourly formation, the opening candlestick, we just broke it on this hourly candlestick. So the bounce up here should be just around the corner. If it's not, folks, we've got further downside, right? So what we want to think about is, can I get to value area high, 44,400, where everybody was buying for the last few days, and see that it's a selling formation, right? Or can I come into 44,225 to 44,250 and reverse? I'll remain under the VWAP. I'll remain under the downward moving averages. My momentum has already taken a dip. We can see a continuation down into these lower edges. My thought for the YM is short the bounces. All right, Bitcoin. Let's look at micro Bitcoin. Running up again after that Argentinian fiasco. I'm not really, I guess more people, when big shakeouts like that happen, I think it draws a lot of people back to the main instrument. And this, of course, main instrument is Bitcoin, and we are trading the micro Bitcoin because the regular Bitcoin carries way too much risk for us to do that. But, you know, I don't know what to say about these. People talk about potential diamond patterns all the time. They are essentially fairly rare, but we could have one. What might it say? I don't know. I mean, thankfully, the diamond polishers are better than that, but, you know, the diamond industry. Side note, I'm very happy to hear that De Beers is finally getting their comeuppance. The diamond industry has been one of the great lies perpetrated by marketing, and that's all I'm going to say about that. But for this diamond pattern, we're still in the box, and we look to be headed to 100. Notice the Keltner bands are still telling us we're in compression mode. So where is momentum? Sitting right in the middle. What is trend? Mixed. I've got upward motion in the first part of the box, downward motion in the second part of the box. Big bounces, very likely to bring in sell zones at the first pass. The pullback action that holds the top of the box is going to tell us whether we've got an updraft here. If you want to trade this, you know, you could try it above 99,000, but I suspect there's a wick or a big giant selling candle on the base of that. But I imagine that people are gravitating more to Bitcoin, micro Bitcoin, Ethereum, Solana, those bigger names, because, you know, these meme coins are just beating them to death with a stick. All right. That being said, go, no go. As long as we hold 98,000, this chart has got updraft. See the negative divergence right here? Very close to the moving average. So we want to see expansion away from the moving average that tells us we have a reversion to the mean on the horizon. Okay? We want to see technical divergence and a range expansion that gives us the shorting event. I think that's up into the 100,000 area. That's what we're staring down. All right, let's look at oil. Very interesting what's going on with oil, but topping formation, 73. What's a topping formation look like? All right, yesterday we talked about, all right, fails to hold higher, breaks down to support, bounces, gives us a lower high, we're off to the races. Now we're going to talk about the concept of expansion away from the moving average while momentum flattens, right? A lot of different clues the market gives us to tell us we've got rotation coming. These wicks, big deal, right? We move up, but we can't hold there. So that means there's selling pressure up there, right? Pushing up, but unable to hold, tells us there's selling pressure. Okay, now, like we would see wicks at the bottom would push down, but it can't hold. It tells us buying pressures underneath. So what are we looking at? Hey, can we hold this 71.56? That's the line in the sand today. My suspicion is that we're now locked in this range between 71.50 and 73. Okay? Obviously, price action's moving up. Old resistance, new support. These spikes up into the 72 area, we have been retesting them. So when it gets to 72, wait for it to retest and give you a higher low. Or if you take the expansion, take the short in the direction of trend. And then when it comes into the higher low, you cover it. But that's the number. 71.56, sideways motion, flattening momentum, expansion away from the moving averages tells us potential reversion to the mean. But in reversion to the mean, we're still going to have trapped sellers that will force price action down and trapped buyers that are going to cover as soon as they get to old support. Okay, and that old support looks like about 72.30-ish, right? Point of control, 72.50. All right, let's look at gold. Very sideways, right? What do we see? We see if we can get this 29.30 to 29.35, we're in good shape. Let me get rid of these Fibonacci's. What is trend? Down. See the Keltner bands, also down. But got a little wiggle room here, which is, once again, look, flattening momentum. Far away from the moving averages, relatively. Mean reversion test. What's likely to happen here? Knowing what we know about these types of formations, what we expect to happen is a bounce that fails. And so what number do I like for that failure event? 29.50. Yesterday's VWAP close is 29.58. The move from the peak yesterday at 5 a.m. to the valley here is 50 points. That's a lot. Okay, so you want to be super careful here. Wait for the short, but notice also what is happening. Fails to close lower, bounces into resistance, pulls back, and holds a floor. So there's a cross current here that tells you, hey, I've got a long in action. The long would be opening at 29.39. The stop, going to be a little wide, right? Maybe 29.36. Kind of wanted to hold that zone. And then this range expansion that could give us 29.60 in a jolt, right? This whole edge, this whole formation, to me, says don't wait until you get to the deepest wicks to try a buy or the biggest spikes to try sell. Other than that, you're going to have to collapse into very tight moving averages, very tight time frames and negotiate peak to trough in some quick strike trades. And that uses a lot of decision brain power, and you can get brain fatigue from doing that for more than a few hours in a day, right? Brain fatigue is real, folks. It is real. And I have noticed I trade terribly in the afternoon if I started trading at 7 o'clock in the morning, which is most days. Okay, so what are we looking at? Beautiful move down into the 607 area. We talked about this a couple days ago. Bounce, look what happens. Bounce, fails to close lower or go lower, runs into resistance, pulls back, holds a higher low. 607.50, 607.30, looks like the buy zone. Runs all the way up. Guess what we're in? We're in a continuation of that bounce. SPY looks like it's going higher, right? Now, notice the last time what happened when it went higher. Fell like a stone in the pre-market, and we never tested that area. So Hogue has this, he talks about it all the time. He talks about these areas that get tested in the pre-market that likely are retested in the active market. So this chart tells me watch for the spike and then the drop. Look at how steep momentum is. Monster steep. Very, very steep momentum. It should start to flatten out. We are not far away from the moving averages, so that's not a mean reversion event yet. It's got to expand. Now, you might go, well, can't I take a long there? Absolutely you can. What's your stop? 610. So you've got $1 of a stop action event. That's 100 ticks. Choose wisely, right? If you're going to use zero DTEs, know this. In the first hour of trading, the majority of zero DTE options lose their value, right? So you're in great shape if you take a couple of naked strangles on either side and let the chart work it out. Most of us don't have that kind of portfolio margin, but you can if you want to. Side note. Okay, let's go to the Qs. Qs also saying, hey, we got some bouncy bounce here. Same sort of momentum, moving straight up, right on top of the moving averages. We should see expansion. 540, up at the edge. If you want to buy it, go for it, right? I don't like that. My thought is, I've got these lower highs. I see price expansion. I know it's running. If I want to take this trade, I will be trading a 2-minute chart. Literally, I'm trading a 2-minute chart, right? And what am I doing? Look at how far outside the Keltner band I am, right? So we know we've got monster price expansion. These are the VWAP volatility bands. Could we see motion to the upside? Absolutely. Absolutely, we could see it. But look at how far away we are from the moving averages. What we want to see happen is the flattening of the momentum indicator that shows us we're going to have mean reversion. And look at how long that takes, because all the price action does is buy the dip into the exponential 14. Getting to the bottom of the Keltner band on this 2-minute chart gives me my buying opportunity because I can see the rotation fails to hold lower, bounces up, and pulls back to give me a higher low. And I know that once I'm up over there, that's where I can buy it. Okay? Very big upside, very dangerous price action. Just saying. Okay. That's it for me, folks. I'll see you at the midday Moneyball report. Good luck trading. Watch your risk. It's going to be a spicy day, and you don't want to give yourself heartburn. Take care.